Hey everyone, my name is Stephen Gage, founder of Vision Commercial Development. Today I want to share with you a great way to get into commercial real estate investing, which is also how I made my own start in this field, and that is through commercial real estate syndication. Many of you may ask, what is commercial real estate syndication? At its core, commercial real estate syndication is a collaborative investment strategy that allows individuals to combine their resources to acquire larger properties than they might be able to on their own. It's important to know that real estate syndications are governed by the Securities and Exchange Commission. So with these types of investments, you must file the documentation and report to the SEC, ensuring that there is transparency and accountability in your investment. So what are the advantages of real estate syndication? There are a lot of advantages to syndicating. Syndication boosts your buying power by pooling together money from several investors, allowing you to take part in bigger, more profitable deals. This team effort not only grants access to higher-end markets, but it also strengthens the stability and liquidity of your assets. By pooling your money together with several different investors, you have access to larger properties which tend to hold their value better and provide more liquidity than smaller assets. If you're in a group that is investing in something like an office space or multifamily living, these properties offer more stability because there are more units, meaning there are less risks for large losses through vacancies. For example, let's say that you buy a retail strip mall. You have 10 tenants, each paying rent. And so if one of those tenants moves out, you still have 9 others paying rent while you wait to release that 10th space. So the income is much more stable than if you had a smaller deal with, say, one tenant leasing from you. In that scenario, if that tenant moves out, you are stuck paying the full payment and expenses on the building until you get it leased up to another tenant. What makes commercial real estate syndication successful? At the heart of any successful real estate syndication lies the expertise of professional property management. It's crucial in preserving and boosting the value and operational effectiveness of the asset, which in turn impacts the ability to produce income. Good management finds the sweet spot between keeping expenses low and delivering high-quality services, making sure the property stands out and remains appealing to tenants. If you understand cap rates, the value of your building is heavily based on your net operating income. The two ways to increase that value is to either reduce expenses or increase your gross revenues, or some combination of both. A good manager can keep costs down, which also increases the value of your property. What are the tax incentives and profit-sharing mechanisms for syndications? One key reason that I was drawn to syndications early in my investing career, aside from the low initial investment required, is the significant tax advantages that they offer. For instance, investors can leverage depreciation to reduce their taxable income. Syndications also typically include a feature known as preferred returns, which ensures that investors receive a predetermined yield before the deal sponsor shares in any of the profits. This setup makes sure that everyone is on the same team and is on the same page about working together and helping each other out. For example, let's just say that you go out and raise $500,000 for investors for your new project. You can structure that deal to pay the investors back a preferred return of, let's say, 8% on their money, and then only after they've gotten their original investment back, plus the 8% preferred return on their capital invested, do you share in the remaining profits with them. It's a way to show your investors that you only make money after they've received their money, making everyone feel better about the deal. What are the roles and framework within the syndication? In the world of syndication, there are two main roles that you'll come across. The deal sponsors or syndicators, who are the ones getting their hands dirty, managing the investment, and then there's you, the investor, who typically puts in the money without having to deal with the day-to-day management of the company. What's really cool here is how flexible these deals can be. Depending on how they're set up, you can see different ways profits and ownership are shared. It's all about making the deal attractive to the investor while making sure everyone involved gets a fair piece of the pie. For those leading the syndication or the deal sponsor, it's a great way to reduce personal financial risk, but it does entail more management work. Most of the initial expenses are covered by the group of investors when the deal is finalized, making it a smart move for syndicators with low working capital. It's simply a way for you as a sponsor to get into a better quality project by providing sweat equity and skills in return for giving your investors a piece of the profits for putting up a bulk of the capital to buy the deal. What are the regulations for syndications? When we dive into the world of syndication, there are two main paths you can take, each with its own set of rules. Rule 506B and Rule 506C. With Rule 506B, you can bring on board as many accredited investors as you like and up to 35 non-accredited investors. However, you'll need to have a pre-existing relationship with the other investors, and you can't advertise your opportunity to the public. On the other hand, Rule 506C is all about accredited investors only. This means that you're allowed to market your deal far and wide. This opens up a lot of doors for reaching potential investors, but it also means that you'll have to stick to certain rules to make sure that everyone involved meets the accredited status. Both paths have their own audience and compliance hoops to jump through, so it's all about finding which one aligns with your investment strategy and how you plan to connect with investors. When you have developed an extensive track record, you might even be able to work with crowdfunding platforms who will market your project to their own investors and take care of a lot of the paperwork for you in exchange for some type of fee. There are a lot more options for capital available to you once you have the experience and a significant track record. What are the risks of syndications? Just like any investment, commercial real estate syndication comes with its own challenges. You might face ups and downs in the rental market, you might face unexpected costs during construction, or even delays in getting the project off the ground. But here's the thing, having a knowledgeable sponsor leading the way can make a big difference. By doing your homework and really getting to know the ins and outs of how syndication works, including the potential benefits and risks, you and your sponsor can navigate these waters more smoothly. It's all about being prepared and working with the right people. So wrapping things up, if you're looking to get into commercial real estate investing, real estate syndication is definitely a path worth considering when you don't have enough capital of your own or you don't want to take on as much risk. Syndication is a way to jump in with the potential for big growth, a steady stream of passive income, and the bonus of sharing any risk with others. Whether you're thinking of stepping in as a syndicator or you're planning to invest, understanding everything from the legal bits, like regulations, to how finances are arranged, and even how to spot and manage risk is very important. My company, Vision Commercial Development, is always on the lookout for new investors who want to participate in groundbreaking projects. If you're new to commercial real estate investing and development, or just interested in working with a team of veteran investors, head over to visioncommercialdevelopment.com and let's start working together. Please give this video a like and subscribe for more commercial real estate content. If you have any questions, please comment below or send a message over on our website, and we'll get back to you as soon as possible. Thanks for watching. We'll see you next time.